I was a little surprised to see the Wall Street Journal say something this bold. The US consumer is starting to freak out. That's quite a statement from one of America's top publications. So, why are consumers so rattled? Because the twin engines that powered 2022 consumer spending are starting to sputter. We're talking about savings and credit. The journal points out that December retail sales fell at the fastest pace of 2022. It's been the same story in 3 of the last 4 months, including January. On top of that, consumer spending fell in December for the second straight month. True, through a lot of last year, consumer spending per se held its own. The White House repeatedly pointed to its proof the economy is sound. Not sure how they got away with saying that because GDP dropped 2 quarters in a row. But you all know I've considered robust-looking spending numbers to be basically a mirage. Why? Because for more than a year, inflation has stayed at or near 40-year highs. We're still in the fastest rate tightening cycle since the 1980s. And year-over-year real wages were negative every month for almost 2 years. So with inflation, tightening rates, and negative wages, how have consumers been spending? The answer is savings and credit. But no one can count on that now. As of December 2022, the personal savings rate dropped 55% year over year. And credit card delinquencies are starting to rise, with balances surging to record levels last year. As of fourth quarter 2022, 90-day credit card delinquencies rose more than 50% year over year. In fact, TransUnion forecasts that 2023 credit card delinquencies will climb to the highest level since the financial crisis. A TransUnion vice president warns, if unemployment goes up and we see a spike in delinquencies, then that indicates a longer-term problem. Here's another reason we could expect more problems for savings and credit. We're starting to see cracks in the labor market. The headline unemployment rate is 3.4%, its lowest in nearly 53 years. But, and this is a big but, corporate America recently laid off employees in a big wave. And a lot of these companies are not small. They're so big, their layoffs have a tangible impact on the economy. Amazon, Google, Microsoft, 3M, and FedEx are just a few that have laid off thousands of people. At least one economist, Nationwide Mutual's chief economist, says these layoff announcements mean employment numbers are about to get ugly. She says the last bastion of strength is the labor market, but I don't think it can withstand all these other forces. One common everyday citizen interviewed by the Wall Street Journal says he's seen his savings dwindle from $3,700 to just 3 cents. He says he's watching all the layoff announcements and asking himself, what's going to happen if I no longer have an income? So yes, no wonder the American consumer is freaking out. Now I have to ask myself, what will happen when we head into a recession? Until next time, I am Devlin Steele.